Hey, it's Clay at claytrader.com, and in this video, I want to talk about what I kind of look at as the forgotten strategy to make money day trading stocks. And this isn't necessarily only for day trading. This could be swing trading, and it could be for any financial market. So not just stocks, it could be options, forex, futures, crypto, anything like that. And I should also note up front that if you've kind of maybe not even realized this, or maybe you haven't put much thought into it, you're perfectly normal. You're not stupid. It's not that you're not working hard enough, because it truly is one of these principles and strategies, methods, whatever you want to call it, that hides in plain sight. Because you're absolutely right. You get into the markets to what? To make money. Okay, so your whole focus is, okay, how do I make money? And you make money by, putting on trades, right? By putting your money into the market. Totally. I mean, that's logical. That's in fact, and that's very true, right? That's how you make money. You put your money into the market so that money can grow, so that you can make profitable trades. But there is another very, very powerful way, and what I teach my members is what I call the PIT principle, which states the following: there is profit in knowing when and what to avoid. Avoid. That is by far the key word in this whole situation, is what you should be avoiding. And that's built upon the foundation of, maybe you've heard this saying, it's one of my favorite quotes out there, but as Benjamin Franklin said, a penny saved is a penny earned. Meaning, if you can just save yourself from losing money in the first place, well, that's the same exact thing as earning it. And what do I mean? Well, let's just say you have a $500 account. And let's just say that you, for whatever reason, whether it be a lack of knowledge, maybe you just miss seeing something, there could be a variety of reasons, but there's a pit out there that, like I said, is totally avoidable, is out there for you to see, is out there for you to recognize, and you just walk right into it and you lose $200, right? So so you move on with your journey, right? And not to insult your intelligence, but if you fall into that pit that, again, could have been avoided, you now have what? $300 left in your account. However, for the people that do recognize, for the people that do realize, oh, look, there's a pit right there, because I'm paying attention to what matters. I realize what I should be paying attention to, when I should be looking at it. And they say, you know what? I don't want to fall into a pit. So let's walk around the pit and avoid it. Well, what do they have when they get over here? Well, it's not $300, right? They have $500. So sure, did they actually make any money by putting money into the market? No, they didn't make any money in that sense, which again, it makes perfect sense. That's what most people think about. That's what most people are focused on. And yeah, exactly. And I'm kind of making up this statistic here, but let's go 70 to 80% of the time, most of trading consistently, most of trading profitably is about avoiding the pits, knowing when and what you should avoid. Have you been there before where you revenge trade, or you just force a trade maybe because you're bored, or maybe, I just want $50 more. So you then go and force a trade, which is actually just a pit sitting out there, and you put yourself into rough situations. I've been there many times before where you take a loss and then you look back, and if you're honest with yourself, you say, I should have never taken that loss in the first place. I should have just, the pit was right there, and I should have seen the pit, and I didn't, and I ended up losing money, and I should have never lost that money in the first place. So again, that is how this works, and it is something that definitely needs to be paid attention to. However, I do realize that right now, all I'm doing is talking in theory right now. I'm just talking about kind of in hypotheticals, but I want to show you how this all played out using a real life example, so that I can try to bring a little bit more real life to this. So what I want to do is walk you through an example that occurred in my private trading group, where sure, no money was made because people actually put money in the market, but people had the chance to save a whole lot of money and miss a big pit. And like I said, didn't necessarily grow their account, but they prevented it from going down, which, like I said, due to this principle, you can argue as making money in an indirect sense. So what we are looking at here is the overall market, and this is just, when I say overall market, I'm just using the SPY, and it is an ETF that just measures pretty much the S&P 500. So for lack of better terms, it's the entire market. It represents that, and at this time, you can see that there is a gap up, and these are called candlesticks if you're not familiar with candlesticks. But the point here being that the price was actually at one point all the way up there, and then the price dropped and dropped and dropped and dropped and dropped. So that's the first bit of context. Very clearly, and I'm not trying to insult your intelligence, but really just to set up the context that, the price was dropping quite a bit. Now, the next bit of context in order for this all to make sense, especially if you're a new trader just getting started and are a beginner to the stock market or what have you, is there is actually a way to make money out there when prices go down. It is called going short. It is called shorting. Now, I'm not going to go down the rabbit hole of how it all works because I realize if you're brand new, you'll be like, wait, say that again, Clay? Did you just say you can actually make money when prices go down? Yes, you can. Well, how does that work? Well, in the description section down below, I'll put a video about how shorting works and all the behind the scenes of that. But for the purpose of this video and the learning lesson, I just want you to understand the fact that you can make money when prices go down within the market. And again, it's called going short, being short, shorting, all those variations. That's how that works. So as I was just talking about, well, yeah, Clay, I mean, if you can make money when prices are going down and this thing is going down, you know what? Well, it seems like that'd be one of the situations right now to go short, right? To try to make money. And as it looks right now, I hope you're saying, well, yeah, Clay, you're kind of insulting my intelligence. The price is literally going down. And if there is a way to make money in the markets when prices go down, then it would probably be a good time to short. So if you're thinking along those lines, perfect. But there's a pit out there right now. There's a very big pit that, like I said, this would probably be more so from a lack of knowledge, but not in all situations. I can also see, maybe somebody like, oh, wow, I missed that. I wasn't paying enough attention, which is kind of, brings about a little minor learning lesson that I'll get to here in a little bit. But right now, I would not say that you're stupid to think, yeah, well, the price is very clearly going down. And if you can make money when prices go down, yeah, maybe I should be shorting. So at the time that we just covered, the chart was looking the way it was, I made this alert and I posted this picture into the chat room community that I'm a part of. So the little minor lesson here is, and I do want to take a step back. Well, Clay, you're just saying this because you offer a community and you want me to join your community. That's true. I would love to have you join the community. But if you're kind of on the fence with even somebody else's community, as much as yes, they're my competitor, and yes, that would be a bummer for you to choose them over me. You know what? If you feel more comfortable with them, if this lesson can help you, kind of just tip you off the fence to join them, then that's great. Again, yeah, bummer for me. But regardless, if you are thinking, maybe there's some value in surrounding myself with other traders, this is one of those little things because I can see how people may have missed what I didn't miss and that what I alerted. And I'm not trying to come across as I have it all figured out or I am some be all end all. Because as part of a community, sometimes other members alert me to pits that I've missed. And I'm like, oh, whew, thank you for showing me that pit because, yeah, for whatever reason, I didn't notice it or I didn't see it. So that's where a community, a team can all feed off each other is not always in the sense of, hey, go make money there. It can be in a sense of, hey, you better avoid that. Watch out. There's a pit right there. And there's great value in that. But in this situation, I happen to alert the community. And I made a comment about, as we've already discussed, SPY, the 5 minutes. So that just means what we were looking at was a 5 minute time frame, meaning each one of those candlesticks represented 5 minutes of time. But so I said, it does look bad. However, then I throw out that big old word, but. And then I tell people to be careful putting on new short positions. Remember, a short position is a trade where you would be making money if prices continue to go down. And again, it all made sense, right? That's why I said, it does look bad out there, but careful, be careful. And why should you be careful, right? That would be the next valid question to ask. Well, as I say, it could bounce. Now you can tell I was typing in a hurry. Hence, I promise, at least I think I know how to spell the word bounce, but I do realize that numbers do not belong inside of words. But like I said, I wanted to get that alert out there very quickly. So I did, type a little too fast and clearly hit the 0 there. But got that alerted and even mistyped, but it could bounce from the previous day's lows. And then I say which it's approaching. It's being just the price in and of itself. And then I put, and I should note this alert was made at 10:12 a.m. And then within the next minute, give or take, I posted this image here so people could see exactly what I was looking at. And you can see down here the green lines are from the previous day's lows. Meaning, yeah, I get it. It's looking bad, but be careful. Why be careful? You don't want to put on any new short positions because the price very well could start to head back up. And if the price starts to head back up, well, then that wouldn't be good for short positions, which again, if you're new, you want to see prices continue to go down. So having a price go up is the exact opposite thing that you would want to see. So that is the alert that I made, just alerting everybody, hey, you know what? There's a pit out there. There's a potential pit. So you might want to be careful. And it's kind of one of those pits that hide in plain sight, because once more, yeah, it did look bad. I mean, the price was coming basically straight down. However, looks can be deceiving. And that's where knowledge comes into play. But also, this is where being part of a community can come into play, because no, you're not perfect. I'm not perfect. Like I already admitted, I miss stuff. You're going to miss stuff out. But when you surround yourself with other people that know what they're doing and knowing what to look for, then, I mean, they can also help you spot those pits too. So let's see what ultimately happened with this. And you can see, again, each one of these, again, as candlesticks, as they're called, represents 5 minutes. So when I made the 5 minute, each one of these candlesticks is just showing us what the price did every single 5 minutes. So the next 5 minutes, you can see the price went down there, actually hit the green line. So that's the level that I was talking about, those lows. So got down right around that area. And then I'm not going to, spend too much time, but I'll just say, needless to say, look at that. Nice bounce. But guess what? The bounce was not over. Little faulty pull back there, and then ripped higher. And then kept going higher and kept going higher. Once again, just to reiterate, for those of you that are new, this is not good for a short position. This is not good when you are shorting. You want to see prices going down, not going essentially straight back up. And had people, like I said, not notice this, and they started putting on short positions down around here when I made that warning, that those were definitely losing trades. Those were definitely very painful trades, because, like I said, the price kept on going up. And look at that. Went up even more. So across the board, let's just look at some other stocks that, would have played out, because this is just the markets. But, for example's sake, let's say that maybe you're thinking, you know what? I want to do Tesla. I think Tesla is going to go down for whatever reason. Now, I can totally see this as a valid thought process. You could be saying, well, I see some support right there. I could see it breaking down through the support, especially when the markets themselves are looking really, really bad. So had somebody gone short Tesla, meaning they want to see that price go down, look what Tesla did after that warning that I gave based on the entire markets. Tesla just boomed to the upside. Crazy. But again, if you took notice and people decided to be careful, they avoided the pit. So sure, did their accounts grow by trading Tesla? No. But did their accounts shrink by taking a bad trade in Tesla from the short side? Absolutely not. A penny saved is a penny earned. I do want to disclose real quick, I'm not saying that any of these are like good short-sided trade setups. I'm just saying that in theory, just generally speaking, this would be a potential thought process. So again, this is Facebook. Maybe you've heard of it. Thing has gone straight down, been going straight down. This is the time that I offered up the warning. So had you gone short thinking, yeah, you know what, it's looking good. It's looking like Facebook should keep on going. Look what happened after I made the alert. Up it went. Again, not a good sign, not what you want to see from a short-sided trade. That is pain. That is losing trades. That could be a big losing trade, especially if you're undisciplined. But again, you didn't actually have to lose money in it had you noticed that the pit that was sitting out there. And then one final example for good measure. Here we're looking at Walmart. Maybe you're thinking, oh, wow, the markets are going. I think Walmart's about to go down, because things are looking bad for the market. I just think Walmart's going down. But again, that alert was made. And then let's see what happened with Walmart after that alert was made. You can see Walmart did not go down, which is what a short position would want. Not only did it not go down, Walmart just went on a monster move to the upside. Again, that is not good from the short side. That would be a losing trade. That could be a very, very, very painful losing trade. In fact, an account buster if people were undisciplined. But again, it didn't actually need to be that way. This was a pit that could have been avoided. And that's the majority of the battle. And I realize I talked about this early, but I want to end on this. I mean, have you been there before where you take a loss and then upon, kind of self-diagnosis, you look back at the loss and you say, I should have never even been in that trade. I should have never I should not have lost money in there. I shouldn't have made money in it either because I shouldn't even been in the trade in the first place. Like I said, I've done that plenty of times. So it doesn't make you a bad, it makes you a bad trader in the sense of you don't want to do it, but it doesn't mean that there's no hope for you. It doesn't mean that, oh, wow, you did that. Jeez, yeah, not many people do that. No, mostly, I think everybody has done that from one time to in the comment section. I've been in pits. Put that in the comment section. I've been in the pits before. Have you ever fallen into a pit that you probably could have been, put this, pit experience. So if you're still watching this right now, we're about 15 minutes in. First off, thank you very much for hanging out with me for this long. But pit experience, put that down below in the comment section. If you've had a trade where upon looking back at it, you're thinking, yeah, I shouldn't have lost money. I should not have fallen down into this pit. So, I mean, I have pit experience. I've been in the pits before that should have been avoided. But like I said, this is definitely the power of course, knowledge, right? That's part of being a knowledgeable trader. That's part of being a profitable trader, is knowing when and what to avoid. And in this situation, it was very alluring because, yeah, the markets were looking great. The markets were getting destroyed. But there was that pit out there where if you had taken notice of it, you weren't putting on any short trades. In all actuality, maybe you put on some long trades. So you could have actually made money in the traditional sense, we'll call it. But even if you didn't put on any trades at all, at least you avoided putting yourself in a situation that would have created your account value going down. So hopefully this helps. Hopefully you can kind of keep in mind this pit principle as you're out there trading. And like I said, I'd love to have you part of the community. But if there's another community like, I don't know, should I really join a community? Is there value in it? Yes, there's definitely value in communities. So there's definitely value in surrounding yourself with other traders that know what they're doing. Because at the end of the day, I only have 2 eyeballs. You only have 2 eyeballs. So that you can always, it's more than realistic to think that you could miss one of those pits out there that ultimately, cost you money when it didn't actually need to. Now, if you enjoyed the video, first off, please hit that thumbs up button. That's a very quick way to let me know, hey, Clay, please keep making these videos. And when I see the likes, then I know, okay, my time is being well spent. Like I said, if you have any other questions, first off, pit experience down below if you can relate. But if you have any other questions or anything like that, then by all means, please leave those down below. And then also, if you are interested in joining the community that I offer, just go to claytrader.com, and it's just the private community. You can click on that, or just go to claytrader.com/team, TEAM /team, because this was an example of teamwork here that I know for sure saved a lot of people money, because that was a big move to the upside. So like I said, if nothing else though, and you just enjoy these videos and want me to keep making them, hit that like button, and hopefully you decide to also subscribe to the channel. So check out the channel as a whole. Look at some of the other videos I have, and I'd love to have you as a subscriber. Thank you for hanging out. And yes, remember the pit principle. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only 1 losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.